Uh, we have been trading the house down. All right, let's get at it. So my plan to turn $5,000 into $1 million of this year, it's going pretty fucking good. Like, it's going really good. Last week we cashed in most of our longs. I personally banked 308K, and we started some trial shorts 2 days before the crash, which have been a mixed bag. Some have gone really, really well. Some didn't go so well, but it's about even. And we stashed some money in our automated press button make money system, which I'm going to show you in a few minutes. But the most profitable move of the bull market, the next move is the best, the power move of the whole bull market, and it's ours to make. We got a couple of weeks to get ready. It's happening very soon, and that's what you're going to discover today. So nothing moves in a straight line. This is a altcoin market cap, and you can see that since October, mid-October, we've been up only in a straight line, and this is highly unusual. Like, it happens, up only periods happen. We're in one now. The odds are very strong, and I'll show you why, that the pullback is starting now. What we've seen in Bitcoin is this is a very, very useful indicator called cumulative volume delta. So what this is the difference between the volume that is sold on the bid, as in market buys from buyers, compared to market sells from sellers. And you can see that as we got to these highs on both spot buying and stablecoin buying, we have aggressive selling into these highs. So what that tells us is that traders are banking the profits. They've had a good run. They're banking their profits and selling out, and that's pretty obvious. That's pretty obvious as well. Now, in 2017, we got the same thing, and the first buying opportunity, the first pullback in 2017 was just never touched again. It was a very emotionally easy buying opportunity because you could get in, forget about it, ride the wave. And in 2021, our first pullback was exactly the same, and you see this in the first pullback of every stock bull market. Go look at the ones in 2010. The first pullback is like a slam dunk to buy in any bull market. We have a very, very, very high probability buy setup coming soon. And it's my task today to see you take every dollar on offer, and we're going to get a pretty good plan. Our task is to identify the coins we want to hold and to prepare stupidly low bids. I call them stink bids. So we're going to prepare our stinkiest stink bids, and hopefully, if things go right, the market will one fine day flash crash into those stink bids. We'll get filled, and immediately after being filled, we'll be in profit, and fingers crossed they'll stay in profit for the whole bull market. Fingers crossed. At this point, we need to understand why momentum crashes happen and what's just happened in the market. Yeah, of course there'll be a replay, James. When traders make money out of Bitcoin, they put that money into other coins to try and do it again. And that money causes other altcoins to go up. So we saw the profit out of Bitcoin go into Solana, and we see that gives traders lots of paper profits, and they keep betting and winning and betting and winning, going further out onto the risk curve to riskier and riskier coins. And we saw that with Solana. There was so much money made in Solana that the Solana guys, the Solana manlets, they started investing in these Solana meme coins, and the weight of money there just drove these things through the roof. And this seems dumb, but it makes logical sense. The weight of money piling into illiquid small coins makes them go up really a lot faster than a real coin could. And the time horizons of traders shorten. And you guys must have noticed this yourselves. A couple of months ago, we were starting to think in terms of 1 month, 2 month holds. The last couple of weeks, we've been thinking in terms of 2 or 3 days. And now it's all like single day pumps. The time horizons of traders shorten. That is your cue to get cautious when instead of people holding for months, they're in and out in days. Now, if we think about the biggest winning coins of the last week, this was Cock Inu. That I can't believe I said that. Get some Cock Inu. That went up 30,000%. We were on this most of the way. This red line is our exit. You can see we got the exit like pretty much perfect. And this dog we've had, spelt WIF, which was a Solana meme coin. You know, this did a incredible thing. I think it was like 200x or something stupid like that, maybe even more, and then straight back down again, of course. And when our CTO told us about he's got a 100x winner on Anal OS, another Solana meme coin. Yes, really. And at that point, like if he's getting 100x on a garbage coin, we know we're close to a crash. Why? Because this clearly isn't like institutional investors saying, well, now's the time. We're back into crypto and my very first play is going to be a bet on Anal OS. Like that's not what was happening here. What's happening is clearly some guy who made a lot of money on Dogwoof Hat or one of those other Sol coins, dumping his money in Anal OS to try and do the same thing again, and it working until it stops. So this behavior, we call it garbage floats to the surface. It's well understood in the academic literature and it's well understood by the quant world. If you want to see the academic paper behind it, the first academic paper is a paper by Pedro Barroso called Momentum Has Its Moments. If you Google Momentum Has Its Moments, there'll be an academic paper which explains this in a lot more detail. But it's particularly obvious to me because in May 2021, our momentum system was in these same garbage coins. It was in TRX, it was in QTUM, it was in Bitcoin Cash, and it was in Litecoin as well, some other really, really terrible coin. So we're in we predicted the start of the pullback we're in now. So thankfully in 100x Coin Club, we cashed in, we took a few trial shorts. That last couple of months in 100x Coin Club, we've just done perfectly. Couldn't have done any better, right? But the big questions remain. How long should this pullback last? How deep will it go? And the meme coins were the last sector to pop off. What's going to be the next sector? Now, the first thing that you need to know is lightning doesn't strike twice. And this is something we know from stock markets, like the hot stocks in 2007 bull market were all resource stocks, BHP, Rio Tinto, Vale, that kind of thing. They were nowhere in the last bull market. So, and as crazy as it seems, in the next stock bull market, tech stocks won't be it. We see this in crypto as well. And there's technical reasons for it. There's so many bag holders now who will sell into any rally that will act as a brake on price appreciation. And investors are likely to pile back into meme coins, causing them to be overvalued. We want things that are undervalued, not overvalued. Meme coins are like yesterday's play. Don't be suckered there. So which coins do we want to own? The scientific way is to bet on momentum. Like the coins which appreciated the fastest have a lead in the race, and the smart bet for that is for the lead to continue to grow. And the reasons are obvious. People love winning. They sell less of the coins that win, and so that by selling less, it makes the coins go up faster. So instead of getting away, like I see in the chat, there's people who've got recommendations for coins. We want to get away from, I like this coin, I hate that coin. We want to get towards statistics and maths. Now, if we look at, this is a chart of every major altcoin since the start of the mid-October rally. The dark blue line is Bitcoin. So the first thing that I would say is anything that hasn't outperformed Bitcoin should be off your radar. All this shit down here, GMX, RNDR, ETH, Lever, AMB. I mean, I think ETH is overdue, but prima facie, it's done nothing. The coins that we should be looking at are the coins that have outperformed, and we have 4 of them, which are standouts. We have TIA. Hey, Pete. We have Sol, we have INJ, and we have AVAX. These are obviously the strongest coins at this rally. And if you look at TIA, for example, even though it's top of the pops now, you'll see very early on, it started to break out right here. You can see that well before it does its thing, you get advance warning. If we look at Sol, the yellow line, you can see that it was breaking out well ahead of other coins. You'll see that INJ also started breaking out here. And AVAX, same thing, also started breaking out early. This is something that we see time and time again. Freedom, why are the outperformers of the recent rally going to be strong again, but meme coins won't? Meme coins are an unusual weight of money. Like we've just seen something really, really extraordinary happen in meme coins. like a one in, you know, like literally like lightning striking. That may happen again before the end of the bull market, and I think it will, but it won't be the next one. The markets never get so obvious that the thing that happened 5 minutes ago lets you make money on it again. If you want to know the highest probability outcome for a market at any point in time, the highest probability outcome is always the thing which fucks the most amount of people. So by if you think about what would fuck the most amount of people, it's meme coins not working. So I think there's a very low meme coins will have another day, but it's certainly not going to be the next one. So let's keep moving. We've got our 5 standout winners. Now, the race isn't always to the swift, the battle isn't always to the strong, but that is the way to bet. So our prima facie, our base case that we can adjust later has to be that these coins, these are the ones we want. Like they've just performed much better than the rest of the pack. TIA, SOL, INJ, and AVAX as the core of a discretionary portfolio. Now, these are not particularly risky or shit coins. These are real coins. So they can 10x, but not 100x is what I'm trying to say. So today we're going to examine these coins in detail and seek to understand what the bottom will look like. And it's not as simple as buy it at this price. We've got to understand why a bottom happens and what it looks like so that we know it when we see it. Now, we're going to get to these standout coins in a few minutes, but we need to appreciate that this is all in the context of a larger wealth accumulation strategy. My plan, the plan that I follow, that I recommend you follow as well, is like this. We periodically transfer profits to our automated system, which does close to 100%. Well, it's doing 100% a year. These are the results since we launched it on 14th of April to clients. We've been running it for a couple of years, and for a couple of years, it's been making 100% a year, and so far it's on track to do 100% CAGR. Its Sharpe ratio is 1.7. Everything is going swimmingly. The drawdowns are very low. This is a very safe way to make money and not lose it if the weather changes or if we're wrong and it's not a bull market. Now, it hasn't had a losing year ever. It outperforms traditional finance trend by 300% in Sharpe ratio terms and by 600% in absolute returns. Returns better than Warren Buffett, Ray Dalio, and George Soros put together. Yes, really. Yes, really. And if we compare the largest and best hedge funds in the world, this is Bloomberg put this out yesterday. This is a list of the top hedge funds in the world. There's a couple at 59 and 48 and 44. The next one goes down to 31, 22. The big names, Citadel, 15%. Winton, they're a good fund. 10.1, Millennium 10, DE Shaw 9.8, Winton 5.6, Balasny 2.7. They're looking pretty fucking ordinary compared to our 100%. That's all I've got to say about that. And our Sharpe ratios are much better than theirs too. So my plan is to keep putting my winnings from 100x Coin Club into FinRev until it's 1 million, and then I'm going to double that $1 million stack again and again and again until it's 10x completely on autopilot. And when I say 10x returns on autopilot, you might think that's hype, but compounding really works great. And since 2019, what I'm going to show you today is turn 10,000 into 203,000. And when we rolled this out to customers on the 14th of April, skeptic would have said I was full of shit. I'm just some fat guy on the internet, big talking marketing asshole. There's no way you can really do that for real. There's no way we can really double our money every year from crypto, at least not spending hours a day on research or day trading, certainly not completely hands off. Everyone knows crypto is feast or famine. Like crypto goes up, down, up, down, up, down, up, down, and you're either making a lot of money or losing most of it in the bad times. But fuck what everyone knows. Everyone knows there's no way to make stable and consistent income from crypto, but they are dead wrong. So let's go to the videotape. So on 14th of April this year, after 10 months of us printing money for ourselves, we rolled this out to our best customers. Bitcoin was at 40,000 then, 40,119 before it. If they left their money in Bitcoin, they're in for an emotional roller coaster. I mean, it went down to 15.9, 60% paper loss, and then a really stunning, like historic rally all the way to the heady heights of, where are we today? 43,000, 7.4% return on their investment. You went through all of this just to get to the same fucking spot. And if they were unlucky enough to have their money in so-called blue chip altcoins, they're in a world of bag holder hurt. Like Ethereum down 27%, BNB 52, Uni down 62%, Matic down 30%. Like that's hard, especially when people are telling you that, oh, crypto's back, but well, not for you, buddy. Like you're still in getting fuck business. So in the same time frame, the press button make money system you'll discover today, it's on track to double your money this year, like clockwork, like it does every fucking year. And it's gotten those results with average drawdowns of 10%. And you'll notice on the hard right edge of the chart, we got a pretty big drawdown for us, which is not really a big drawdown. Everyone else got fucked the last couple of days. FINREV just shrugs it off, right? So this week, many of the so-called blue chip coins crashed 20% an hour. Our system anticipated, sidestepped the carnage, limiting losses to around 10%. It's already bouncing back. And what you're going to see today, and what no one else has figured out yet, is that you don't have to worry about keeping your crypto money profits when the bull market ends. And this is the game changer, because traditionally you make a shit ton of money and then you give most of it back, and it's Hotel California. You're always up, but you can never leave. We've solved that problem. What you're going to say, what no one else has figured out, you can safely YOLO into some of these degenerate, completely irresponsible dog with hat, cock in you coin plays that we do every single day in the 100x Coin Club, like cock in you we bought here. This is an old slide we sold out after that. Bonk, like FTT, we're still short. We're short from up here, still short. I removed the take profit on that. And before we move on, let's take a quick look at those coins that we're wanting to buy. So we're looking at specifically at Sol, INJ, TIA, and AVAX, arguably Rune, but maybe not. And so before they broke out, they gave us a clue with this early breakout. So we're looking for that. That's what we're looking for. Our plan is to buy these coins and anything else making an early move in the next round. There's probably going to be some other out of the blue thing that just does crazy returns, and we want to be on it by noticing its early breakout. And that's my job. That's what I do for you guys in the 100x Coin Club. I'm all over that. So how do we know when to buy the dip? Conceptually, a dip must shake weak hands out. So the concept is that the bus must leave empty if a coin is going to rally 10x. Every time people sell, it drops the price. So for a coin to be capable of rallying 10 times or 100 times, it has to be filled with diamond hand, really strong guys who won't sell out. They won't sell out. And so how do we know that a coin is filled with guys who won't sell out? Well, we scare them. We call it the scare the hose stage. And so conceptually, a dip should be fastest and hardest in its final stage. It should make you go, oh, wow. Oh, I don't know about buying here. And conceptually, at the optimal moment, you're going to know it's the optimal moment because you will not feel optimistic. If you feel like, oh, this is a great buying opportunity, I've got to buy this dip. No. That ain't it. That ain't it, Chief. The right buying opportunity, you should feel, I don't want to do this. Like, I know I should, I know I plan to, but I don't know. This is too scary. Like, this is puckering my butthole. That's the optimal spot. And you might think that's a bit of hyperbole, but because we're social animals, we're primates, we're a species of slightly smarter than usual monkeys. When we feel panic, we all feel it together. And so this is actually kind of reliable. So let's look at Sol during the first pullback of the 2021 bull. There was multiple opportunities to buy. So we got, and the sweet spot is generally between a 50 and 62% pullback. Not that there's anything real about Fibonacci numbers. It's just that's about right. And you can see in Solana, we got multiple opportunities to buy. The sweet spot is between 50 and 62% pullback. And we want to layer bids. I'll show you how to do that in a minute. And what we see is that for the subsequent bull market, that entry point was never threatened. So you never had any anxious moments or sleepless nights. You just went long, and it was one move, push your chips into the table at the right time, and then profit. So another way to find this buy point is with FINREV, and that's another thing that I do in the 100x Coin Club is we're using FINREV to look at where the momentum comes back to zero and resets. This is generally a great spot to buy in bull markets. So this is another way that we're timing our entries using the FINREV system. Let's look at AVAX during the first pullback of the 2021. There was multiple opportunities to buy. The sweet spot again was between 50 and 62%. This one just got to 50%. That buy point was never threatened for the whole bull market afterwards. So that made it emotionally easy. And if we look at it again in FINREV, FINREV just nailed the buy point, right? Like just absolutely nailed it. And you get on and stay long for the rest of the thing and then get out of it here. So here's the play for Sol. Nikki, FINREV is an automated trend following system that we use. It's safer and more consistent than manually trading coins is I guess the short version. So here's the play for Solana. So Solana's gone from, $8 down here, and really in a straight line, it's gone from $20 to $130. What's a reasonable pullback is somewhere between $50 and $72. So how should you play this? Let's say you want to buy 10 grand worth of Solana. You want to layer those bids. 2,000, 2,000, 2,000, 2,000, 2,000, and maybe only 60% of them will get filled. Maybe only one of them will get filled. If you only get filled on one, that's actually a pretty good sign because it's strong. If you get filled on them all, good. But that's basically the way that you should do it, is to split it up into 4 or 5 chunks and layer into it, not try and top tick the bottom. And hopefully this last stage of the drop tends to happen really fast. Like this could happen, you could get all 5 of these filled within 15 minutes. Like that's typically the way it goes. So you've got to be prepared. You can't just think, oh, I'll know it when it comes. Now, here's the play for TIA, which is a new coin. You can see because there's less baggage, less bag holders, this one already recovered to fresh highs. So the fact that it had the crash and then immediately broke out to $17, it's just phenomenal, like phenomenally strong. So we want to be layering between $8 and $9.80. If you got TIA accumulated for $10, given that the market seems to think that it can be worth over 17 in the last couple of days, that would be phenomenal buying. Now we can check FINREV going forward, but we can't check it historically because TIA didn't exist then. Same deal for AVAX. AVAX, we want to layer between $22 and $29. And INJ between $20 and $26. Freedom, running through layered stops sucks. Yes, it does. But running through layered limit buys is great. And we've got to note that anything else that's making a really, really serious move will likely break out early. So we're going to keep an eye on the 100x Coin Club alerts, and there'll probably be a couple others that we'll find along the way. So let's move on to what we do with our winnings. So what I'm going to show you today, it transcends any bad crypto market news or any bullshit that disrupts the markets. It's the most powerful trading strategy by far ever created. The only trading strategy proven by Nobel Prize economists and hedge funds alike to actually beat the market in the long term. It outperforms every other strategy in literally every other market out there, but works much better on crypto. It's got a 100+ year track record of working. It does its best work in the most chaotic times, works in up and down markets. If the bull market ends, you'll still be good, which is the real thing. It requires no thinking, no luck, no education, no predictions. It's created countless billionaires and multimillionaires like this guy, John Henry. All he's ever done is trend following. He's worth $4 billion, owns Liverpool Football Club, Boston Red Sox, and this thing called RFK Racing. This is my own personal results for the last couple of years in these markets. It's from a month ago, actually. I did pretty well. So I did 53% this year in TradFi, 89% the year before that. I did 32% the year before that. I did 18.53% the year before that. And depending on how each month to month goes, I have between $4.2 and $4.5 million in this now. And it grows at 53% a year. Katrina, the SOL layer amounts I will get for you in a few minutes. So when you apply this same strategy to crypto, you get twice as rich every year. And it works much better. Like I've done really well out of traditional finance trend following. It's like 6 times as good in crypto. And so you can see that the yellow is Bitcoin, and Bitcoin has some times when it outperforms, but it also gets fucked on a regular basis. So you make a lot of money and you get fucked, and it looks like it's going to be okay, and then it looks like it's going to be okay, and then it breaks your heart, and then Fredo, it breaks your heart again, and then it comes back, and it's such a nightmare. But our strategy, it just steady and smooths and just trickles up. It goes sideways for long periods of time and then trickles up. So as you'll see shortly, I've created a simple system that puts the whole thing on autopilot. And I didn't discover any of this. I stole it from some of the most powerful and successful hedge funds on earth. I just reverse engineered it. Today, I'm going to tell you the crazy story of how I did it, how it's going to make you twice as rich in the next 12 months. And before we get to that, up until now, this wasn't available to most people. Most of these funds require at least $1 million to talk to. A lot of them require 5 or 10 times that to even consider investing with them. If you want to do this on your own, like I did for many years, you really need at least 500K. And even then, it's not ideal. I did it myself for years, but I could never take a day off. Like I would book plane tickets and make sure that I was in the air while the markets were closed. I got sent to hospital with full kidney failure, and here's me doing my daily work, trading my trend following systems with 2% kidney function, about to die. So you can't take a day off. But I've changed that. So not only am I bringing this fantastic strategy to you, what I have for you today is a fully automated press button make money system that can double your money this year. And with this system, your returns are going to demolish the best investors on earth. The best hedge funds on earth do 12 to 15% a year. With that, you double your money every 5 to 6 years if you're lucky. System I'm going to show you today does it over 100% a year. You double your money every year. You're quite literally getting richer 5 to 6 times faster than you could investing with the best hedge funds on the planet. Which is why I'm opening the kimono. Today, you're going to see the secret sauce behind what these hedge funds are doing, nothing held back. You're going to, the kidneys recovered good, Zane. I made a full recovery, which was very lucky. It was 6, 7 years ago. So you're going to see all the intricate details about how this strategy works and why it works, what makes it everything proof, how it can make you rich, whether Bitcoin goes to $1 million a coin or whether it goes to zero and it goes back to where it was. It's going to actually work better in that situation. Why I'm betting the farm of it, I've got more than 70% of my net worth now in this strategy because it's done so well. The fully automated system I've created that can double your money this year in crypto with no trading background, no technical skills, even if you've never bought any crypto or financial asset before. Now, let's go back in time for a second because you might think that I'm a crypto guy, but the reality is that crypto is just a means to an end for me. I'm really a systems guy first. I mean, trading system designer is my core skill. If a new asset came along that I thought was going to work better, I'd switch out in a heartbeat. So I'm in this to do my job as a provider for my family and help us, live the life of our dreams. I'm not in it for fancy cars or designer clothes, like I dress like a homeless person. I'm in this to hit my number and walk away. And I know really clearly what my number is. I want to spend time watching my daughter grow up and being a part of that. And I want to walk on the beach watching the sunset. Well, I do that every day anyway with my wife. And I'm in this. This is my goal, is to do what I want, when I want, with whoever I want for however long I want. I'm here to help you do the same. So we're going to go wherever we have the easiest path making those happen. Right now, it's in crypto. So let me take you back in time now. Let me show you the strange chain of events that led to me creating the best system that I've ever seen. So anyway, it's 2007. It's my first year of full trading. I'm up big, like big, more than I'd ever been in my whole trading career. And I was up about 900 grand in the first 9 months, and I was doing everything with like technical analysis, my own wit and discretion. And I thought I was the shit, I couldn't lose. And then 2008 happened, and I completely didn't see it coming. And it absolutely wrecked me, gave back all the profits and then some. And this is a big problem. Like if I can't predict a 2008 and I give back 90% of the money I make, then this whole game is impossible. But I didn't give up. I went back to this. The first book I ever read on trading was called Market Wizards. And one of the people featured in the book is a guy called Ed Seykota. He's actually known for being one of, if not the best investors of all time. And for us regular guys like us who are starting with smaller grub stakes, he's the guy. So what he did is turned $5,000 into something like $15 million in 12 years. And that's kind of what we're trying to do. We're trying to start with a little and end up with a giant pile. This is more impressive than any billionaire around. And in terms of pure compounding percentage, no one's ever touched him. So I found him online. I joined his trading self-help group called the Trading Tribe. He had this like 1-900. There was like a phone sex line. It was like $1,000 a minute to talk to him. I spent a bunch of money talking to him about it. And Ed was a fucking problem. Like Ed was this weird guy Ed Seykota. He would never give specifics about his trading systems, even though we knew all about them, but he sang these weird songs about trading while on his banjo. And he's doing one of these like trading song things for us. And the song is like stuck in my head. It's like, one good trend. What do we do when we see a trend? We ride that sucker right to an end. What do we do when we show a loss? We give that goddamn loss a toss. One good trend pays for them all. And I got to thinking, like, what is really trend? And I became like completely obsessed with trend following. And those who one of the first things I found was this really interesting story about, there was a Nobel Prize winner called Gene Farmer on the right. They almost made him give him his Nobel Prize back. And so there was a guy called Cliff Asness, who's a billionaire, multi-billionaire now. He was a PhD student of this guy. And now Farmer won the Nobel Prize in economics for the efficient markets hypothesis, which says that he won the Nobel for saying that the markets couldn't be beaten. But Cliff, his student, actually wrote a paper on trend following, and his paper said that his teacher was wrong. And it turns out that Farmer was completely wrong. Cliff's stuff was really rock solid. Farmer admitted that trend following is the only way to beat the market, and he called it the premier anomaly in finance. He meant that this is the exception to the rule, the one thing that can beat the market, and it got better from there. So I started looking into the hedge funds using these strategies, and they were just crushing it. So this one was one of the OGs, Dunn Capital. They've got this incredible return where they turned $1,000 into 1.2 million. Way out, 10 times as good as the S&P in the same period. Average of 17% returns, which is amazing, but their average drawdown is 36%. And the system we've created, it returns 107% per year, which is over 90% better returns. And the average drawdown is 8%. So your drawdowns are literally a quarter the size. You make 9 times more money, keep 4 times as much of it. I have money with this firm. I love this firm. But, I've made millions and millions of dollars with these guys, but they have huge, huge drawdowns. They're doing an average of 14% per year with 33% realized volatility. It's a wild ride. And this is Winton Capital, which is a large and modern trend following CTA fund. Immediately obvious that this is much smoother than the others. This is closer to what we do ourselves with crypto, but the returns are not nearly as good as our system on crypto. The returns are only 12.51%. The drawdowns are much better, 16% annual standard deviation, but still 3 times as high as with FINRA. So not only are we beating the pants off these guys on pure money, we're giving back at least 3 times less money, up to 4 times less money. We're not just making more money than they've ever been able to, we're keeping way more of it too. So after I discovered how awesome this was, I decided to give it a go myself. This is my first big year with Trend. I managed to turn 600 into 900K inside of a year, and I was hooked. Now, Trend has made me quite a lot of money, but it was a lot of work. It was not super sustainable. And the biggest problem with Trend is you have to have a lot of money up front. And I found a way around all that. And it makes it really suitable for small investors. For that, we have to fast forward to 2014. I'm on my buddy's yacht, not this yacht, actually, it's like a 60-foot yacht, but it's still a big boat. And this guy was if you imagined a white guy loser living in Thailand because it's easy to get chicks here, that's the guy. He's like a pasty white nerd stoner sitting on the couch. You would say that he is as big a loser as losers get. He just gets stoned all day. And, he's a good guy, really great guy. And I came to find out that I didn't know the whole story. He's actually made, he was minted off crypto and he's just living his best life. It turns out it turns out that this yacht, it's parked outside his incredible beachfront mansion on the nicest beach in Thailand at Krabi. And I had another buddy who I thought was the same, like English teacher, kind of bottom of the pack guy here in Thai society. But this guy's driving an Audi. He has a beautiful house on Koh Samui, and it's just like living his dream life. And I found out they were doing it all through crypto. And I'll be the first person to admit, I thought crypto was a joke. I thought I trade real markets. I'm a professional, but to shut them up, I bought a few Bitcoins and then I started trading them, and Bitcoin went crazy right after I bought it, and I tripled my money trading alts in 3 months. And then the bear market came in 2018 and I got wrecked and held through it. And that's really what most people think when they think of crypto, making a lot of money quickly and then losing it. And up until now, that's the way it's been, but I found a way to do that. I found a way around it. My first shot was a system called the Automated Wealth Creation Engine. With very minimal effort, it worked great, worked better than I could imagine. I personally made 700K in just under a year from it. A bunch of other people made money from it too. And the big innovation I've discovered, what I think is the greatest discovery in little guy finance, is when you apply the very well proven strategy of trend following to crypto, it does better than hedge funds do in traditional markets, and not by a little. It just crushes them. It works 6 times better than they've ever been able to make it work. And it makes it not just possible, but likely that you'll double your money this year. But what I didn't expect is that it actually removes all the crazy swings from crypto, which is the real problem with crypto, is right. Like the only problem with crypto is that when it's all over, you lose 80, 90% of your money. Like that's the part that sucks. And this is why the system I've created is able to be profitable every single year, no matter what the broad crypto market is doing. And I know what you're thinking. No rational person would invest in crypto right now, right? And that would be the case if you're doing it like everyone else. But what I'm talking about today isn't really crypto. It's a systems thing. So today is really about the time-tested, battle-tested, proven to work in the real world strategy of trend following, and how it works better in crypto than anywhere else. And it's the foundation of the whole thing. The basis, the system I built isn't specific to crypto. It's just something that's universally the best way to trade any market. It works better on crypto. Why? Because crypto moves more often and with more force than any other market in human history. We didn't choose crypto because we're some fanboys. I like crypto as much as anyone, but I'm not a like laser-eyed future of money guy. We chose crypto because it moves further, it moves faster than any other asset in the history of creation. That's it. That's why the first system worked so well, but it wasn't perfect. Made tons of money in the bull market, but I designed it to put us in cash when the bear market came in. It worked like I designed it. At Bitcoin 25,000, we were out back to cash, and we were out of alts very quickly and into Bitcoin. For that, we kept the majority of the money we made. We kept about 60% of it. But it just wasn't very satisfying to only get to make money 1 out of 5 years and spend the rest of the time sitting on the sidelines. The perfect system. It has to work in bull markets, bear markets, ostrich markets, any markets. It would perform well regardless of exchanges collapsing, banks collapsing, scam coins, moon coins. Next system has to work no matter what. It has to be robust, anti-fragile, has to have big returns without the big swings. One day I'm listening to this podcast that I'm big on, Top Traders Unplugged. It all comes together. So there were these 2 very well-known hedge fund managers, and they're arguing about whose fund system was better. And they're arguing about the details. They're just giving it, these are like $150 billion hedge funds. And they're just giving away the exact details of their algorithms. And I'm shocked, and I spit out a mouthful of coffee and start writing it down. And I've got 13 pages of notes, and those 13 pages of notes are still the basis of our system today, like even after all the improvements we've done. So I found all the people who were working at these hedge funds, and I started looking them up on LinkedIn, and they're all academic types, and they've all published papers on this. And so it was really a simple process of spidering out all the people who on this podcast, all the people who work for them, read all their PhD papers and academic research. And it turns out there's nothing secret about this. It's all just out there on the internet waiting for some hard-headed motherfucker like me to put it all together. So I'd already figured how to make trend work on crypto on the way up. Now we have the secret sauce from the top hedge funds, how to make it work in bear markets too. I thought to myself, how fucking hard could it be? Like, I got this. And it turns out it was really, really hard. And it was worth it because it doesn't just work. It works better than literally anything else out there. So it's the most fun I've ever had. Now it's going to make you rich. I hired the best engineer I could find, who's a true top 1,000 in the world programmer, far smarter than me. And we got obsessed and set about proving all the stuff in these academic papers from first principles, not through back tests or stuff like that. We had to get maths tutors, and we recruited a great team of programmers. And we built the best trend following hedge fund we possibly could. And hand on heart, it is absolutely state of the art, as good as anything in any hedge fund in the world. And 10 months ago, we turned it, well, 10 months before we gave it to clients, we turned it loose on crypto without doing a back test first. And now it's going to make you rich. And because this thing is the accomplishment of my life, like it really is my life's work. I've been building trading systems for 15 years now, and this is the best one by far. It's the end point. Actually, it's the end game. It's 100% fully automated. It's set and forget it. The system is quite literally my life's work. I'm beyond proud of it. I'm so grateful I get to be here sharing it with you. It's called FinRev, and it's short for Financial Revolution because that's what it truly is. It's a financial revolution. And it gives a little guy just a huge leg up in his life. Like I shit you not, I can hand on heart say, take a few minutes, press a couple of buttons, set this thing up. You can double your money this year without doing any work, paying any attention to it at all. It's going to work better if you just clock off and forget. So let's talk results. So Bitcoin is in yellow, and you can see that Bitcoin holding Bitcoin is doing pretty well when the times are good, but when times go bad, FinRev just goes sideways, whereas Bitcoin gets fucked. Same here. As we get a bear market, if you bought at the absolute top of the last bull market, you're way ahead on FinRev, and you're way behind if you just hold crypto. It's been profitable every single year. The blue is FinRev. 2022 is profitable. 2023 is very profitable. These are the results since 2019. Our average is 97% per year and 2,600% cumulative. But this is the client results since April launch. So you can see that for the last 4 years, it had done 97%. This year, it's done 100%. It's like bang on the averages. It's so reliable and consistent. And our Sharpe ratio of 1.7 is almost exactly the same as the Sharpe ratio in previous years. It's like very, very steady. And when things went bad for crypto, like when Luna and Three Arrows Capital went to shit, or when Binance was sued by the SEC, our system has a statistical tendency to just make a lot of money. And that's part of the nature of trend following. 3 days ago, the rest of the market crashed. Like it crashed like a motherfucker inside of 15 minutes, 20 to 35%. But our clients barely noticed. So this is our underwater plot. And you can see that our maximum drawdown has been 20%. And it just barely touched 10%. Our average drawdown is a bit under 10%. Beats hedge fund returns by a mile. Dun Composite is a standout hedge fund, like one of the best records in history. 17%. Ours is 100%. It's 90% better. The average drawdown is 8.3%. So your drawdowns are a quarter the size. Their average drawdowns are 36%. You make 9 times more money, you keep 4 times less of it. And Mulvaney, the same thing. The returns are 14% per year with 33% realized volatility and regular 50% drawdowns. This is Winton Capital again. The drawdowns are much better, but still way higher than FinRev. Maximum drawdown 25%. So we're not just making more money than they've been able to, we're keeping way more of it. Now let's look at the Sharpe ratio. A Sharpe ratio is a way for investors to compare results that are independent of leverage. So it's a way of apples for apples comparing everyone on the same playing field. So buy and hold stocks is about 0.4. The old school trend following, like the bumpy ones we saw a moment ago, 0.55 to 0.7. Warren Buffett is a good example. He's 0.76. If you held Bitcoin through a 10-year hold, it's 0.81. Ray Dalio, 0.9. George Soros, 1. Vola-targeted trend following, like Winton Capital, like Man AHL, between 1 and 1.2. And what we do is between 1.2 and 1.8. And we're currently sitting at 1.7. There are people better than us. Renaissance Technology are the all-time goats of algo trading. Almost everyone who works there is a billionaire now. You can't invest in their fund. They do 2.5. So we're at 1.7. The best of all time by a fair margin is at 2.5. And Stevie Cohen is the guy who they based the TV show Billions on. He was caught insider trading and he's on 2.52. So that's an example of where we sit in the pecking order. So the bottom line is our system performs far better than almost anything else, except for like Bernie Madoff and insider trading. But this isn't about getting rich this year. This is about long-term life-changing wealth creation. The longer crypto stays toxic for Wall Street, the better things are for us. Less competition, more guys with monkey profile JPEGs as their profile pics. Those are the guys you want to trade against, not Stevie Cohen. If crypto goes effectively to zero, that risk premium is going to increase dramatically. If crypto gets banned or it has another big disaster, some exchange goes down, we're going to make a lot of money. Now, at a minimum, I think we can expect 10 years of above normal returns. Anyone who knows anything knows that compound interest is how it's all done. So let's look at some compound interest. If you were just getting 30% per year, which is pretty fucking good actually, and you put $10,000 in, after 5 years, you've got 37K. After 10 years, you've got a 13X. At 50%, half of what we do. After 10 years, you've got a 33X return. After 5 years, you've got a 6X return. If we get 100% a year, you put in $10,000, you've got a 32X return after 5 years, and you've got a 1,024X after 10 years, and you can turn $10,000 into an 8-figure payout if you get 100% a year. We're on track to do that, by the way. Now, compounding really is the magic of the world. Like, if you want to get an 8-figure retiring sum, the way to do it is to earn a decent win on 100x Coin Club and shove that in here and let it compound over time and set and forget about it. Now, my goal for you is the same as my goal for myself. I want you to be able to do whatever you want, wherever you want, with whoever you want, for as long as you want. And money is just a tool to buy time and freedom, and compounding does the real work. Trading systems do not get any better than this. They get different with different return streams, different skew, different diversification. Push a few buttons, leave it alone, never look at it again. There's a great chance it's going to double your money this year, next year, the year after that, like it does every fucking year. Now that you've seen how powerful this system is, let me show you how easy it is to set up and use. Take zero technical skills, zero trading background. If you can open a web browser and load up Netflix, you can use this system to double your money this year and every year after that. Let's show you literally every step, start to finish. So we put a lot of thought into security. There's a bunch of technical, hardware authentication going on here. The bottom line is that API keys are encrypted using RSAES-OAEP with a 4096-bit key and SHA-512 digest, using a FIPS 140-2 Level 3 certified hardware security module stored securely in Google Cloud Secret Manager. What that basically means is there's a hardware module we have lodged in Google Cloud with Google. Like, it's a physical device, and we can't get access to your API keys without being physically present there. So it means that none of our staff have access to your API keys, so no one can be stealing your shit, basically. The setup is easy as copy and paste. You go to your exchange, and we've got Binance, Bybit, KuCoin, BitGet, DYDX, distributed exchange suitable for customers in the US. CM, what vol are you targeting in those results? The ones that I've shown you have been 45% targeted. You can tune it up quite a lot from that. So that's I wouldn't call 45% conservative, but I would say it's middle of the road. You can go more aggressive if you want. Now, the way this works is you connect an API key to your exchange, and at 0000 Greenwich Mean Time the next day, the system recognizes that funds are in your account. You put in $10,000 in your account, it starts trading with $10,000. And if you add more funds, if you add another 10,000 the next day, the system just recognizes it and starts trading with those money. If you pull your money out, you don't have to email support or ask permission or anything like that. You pull your money out, the system will recognize, hey, he pulled 10 grand out. Now, how much have I got to trade with? Let's adjust position size. So an API key gives the software permission to trade your account, but it does not give there's zero possibility that any API key transaction can transfer money out of your account. That's just impossible. There's zero possibility that we can access your account in any way, shape, or form. You have total and complete control. You can stop trading at any time. You can log into your Binance or your Bybit or your KuCoin and just disconnect every position and disconnect the API key. You can stop anytime. You don't have to ask our permission to do anything. It's your funds, it's your account, it's your everything, and you remain in total control. So here's the way it works. You log on and you get this dashboard. The first thing you see is this equity curve, pretty obvious. How much money have I made? Here is your account value. Here is your net principal, which is the funds that you've added less the profits that you've taken out. So that's how much you put in, and this is how much profit you've got. Pretty simple. It'll show you a portfolio. You can click on any portfolio position, and you'll see that they're either short or long. You can click on any position, and it brings up a chart. The chart is customizable. You can zoom in and zoom out. And these little bad boys here are forecasts. And you can see the position size that you held on any given date, and how much, and what the open price, and how much collateral was used. You can go to the trade history tab, click on any coin like Ethereum here, and you'll see a list of what happened on every day with Ethereum. So you get really a high degree of granularity, and you can see everything. You can also do this in your trading account. So just stick with me for 5 minutes while I get a bit nerdy. This is probably going to go over your head, but it's still good to know, right? So the way that it works is we have 6 different trend following algorithms. These are all the little dot plots here. we average those into a forecast. If that forecast is positive, it's the blue line here. If that forecast is positive, we're going long. If the forecast is negative, like it was here, we're going short. And we take 6 different types of trend systems. Each of those 6 systems has 6 subsystems inside them. But all you need to know is that everything blends together into one single forecast. And that's one number to rule them all. And so what this does, it makes the system extremely robust and anti-fragile. Because if one system is wrong, we're taking an average of 36 different systems. So it's unlikely that all 36 are completely fucked. That's basically it. And the returns are predictable and reliable. KB, the DYDX and BitGet are both available for US customers, and they both work really well. Richard, the position size is, we don't use leverage. I'll get into that in a minute. We don't need to use leverage. So we custom tailor this system to you. So if you're close to retirement, you can't be taking any risk. You have to dial back your risk, and we can dial down the returns to get less wiggle. If you're young, if you're in your 20s, the optimal strategy for you is to take a few extra risks, swing for the fences, because you've got time to recover. So we can dial it up or dial it down, and our CTO has volatility dialed up to 100%, which is insane, and like more than I would allow clients to do, but he's gotten like a 600% return in 3 months. So it gets even better. So this is going to blow your minds. This is how best practice hedge funds do things. We practice what's called fitting. And when we have statistically significant evidence, we change the weighting to give more capital to stronger forecasts. So what this does is lowers drawdowns, gives us higher profits, because more capital is going to the systems that are working better. So here you can see we have our 6 different systems: moving average crossovers, MACD, Bollinger Bands, floor ceiling, which is a thing with which our hedge fund guy, Laurent Benoit, has used for Fidelity, normalized momentum from another hedge fund by a guy called Rob Carver, and breakouts, which are industry standard. And you can see that of the best of them, the moving average crossovers do well, breakouts are second, and the others are, jockeying for last positions. We allocate more money to whatever's winning. And so it's kind of like this. It's kind of like the strongest bet is always on the car that's winning. And it works really well. So what that does is, this is before the fitting process. You can see these drawdowns were quite reasonable, and a big difference between before costs and after costs. This is the orange is before and the blue is after costs. Whereas after the fitting process, you can see that these drawdowns become sideways, period. And that's what it's for. The same thing applies to individual coins. Bitcoin has 10 times the weight of Sol. Bitcoin is 5% and Solana is 3%. James, DYDX says that, but they allow, and they don't have a way to stop US customers. So DYDX doesn't have a username and password login system like anyone else. It's a smart contract. If you deposit funds to that smart contract, they're in their system, and they don't even know who you are, let alone where you are. So they say you can't do it, but they have no way of stopping it, is the bottom line. Now, the point here is that Bitcoin was doing better than Solana at the start of the year, and so it got 10 times the weight. Solana is now doing better than Bitcoin, and if we look at Solana now, what we should see is that in the portfolio weight, Solana was very low here. And you can see that as Solana started doing better, it upped its portfolio weight from 1.7% up to a peak of 7.9%. DYDX is not a KYC exchange. In fact, no distributed exchanges are KYC exchanges. Now, that reweighting happens once a week. Now, there's something we discovered, is that trend following works unequivocally better with higher volume and lower volatility coins. So we split all our coins up into 10 chunks. This is the quietest 10 coins. This is 10 to 20, 20 to 30. And you can see, and this is our forecast. So this is the correlation with next day returns. 0,000 is a coin flip. So anything below here is worse than a coin flip. Anything above here is better than a coin flip. So you can see that our quietest 10% of coins, which would be Bitcoin, Ethereum, things like that, are unequivocally the best for trend, and that stays reasonably consistent until the bottom 10% of coins, the shit coins, the smaller coins, are actually a negative edge. Now, in very small coins, there's a negative trend effect caused by pump and dump characteristics. And this is the top 10%. You can still top 10% by volume in CoinGecko, 10 to 20% volume. You can see by the time we get to 20 or 30%, anything that makes a 20-day high, this is the effect of anything making a 20-day high. You can see that we have anything making a 20-day high as an extreme negative effect that gets worse and worse and worse. So on average, buying breakouts works for big coins, but on small coins, you lose a lot of money. So it's just something to know. And the more liquid the coin, the better it works. And this is Binance top 20 annual this is next day log returns versus our forecast decile. So what we want to see is bottom left to top right. The lowest forecasts lose a lot of money and the highest forecasts make a lot of money. And you can see that these progressively flatten out until there's not much of an edge down here with the bottom 10% of the volume. Now, exchanges are all working well so far. This is the median performance of all our Bybit, Binance, BitGet, KuCoin, DYDX. There's no clear winner. You know, Binance looks like a winner, but at various times it's underperformed. No real way to see it. So the next improvement that we're rolling out, it's a game changer. So we're adding what's called cross-sectional carry. Now, cross-sectional carry, you can see, is very smooth with occasional points of shitting the bed. Very smooth with occasional points of shitting the bed. Very smooth, occasional points of shitting the bed. Trend is the opposite. Trend is mostly going sideways, occasionally printing money, mostly going sideways. So you blend these two together and it makes a very steady and smooth thing. This is the big game changer for us. So if you're a little lost and confused, good. You shouldn't get this straight away. It took us 2 years to sort this all out. Maths tutors and all kinds of stuff. You know, a team of 6 programmers and, you know, 3 guys have worked in hedge funds before. So the point is that you know all this work's happening in the background, and this is what's responsible for making you all the money. You don't need to understand every detail. We automated the whole thing so you don't have to think about it. It's why I've created a whole university around trend following and around the system. So those who want to learn more can. I want you to be as educated as you want about how this thing works and whether you want it to be a black box that prints money or you want to know every exhaustive detail. Who's impressed so far? So if you're still here and this is interesting to you, let me tell you how you can put it to work for yourself and get on your way to doubling your money this year. So the combination of what we do in the 100x Coin Club. People say, well, what's the difference between 100x Coin Club? Why don't you just run FinRev on the 100x Coin Club coins? As you've seen, those smaller shit coins don't work with trend. So there's a lot more money on offer with these really, really small coins and manipulated coins, but it's a lot riskier. So the combination of them together is you have your risky bets when they come off in 100x Coin Club, you put them into FinRev. That's what I'm doing. Now, here's the pricing system starting next week. This is your last chance at the old pricing. I was going to launch the new pricing here, but our tech guys just weren't quite ready for it. So you get the benefit of the old pricing for 1 more week. So our new pricing is 2.5 years of trend following only at 6,500 with a standard 40% volatility target and 1 single exchange. For 9,500, you get 2.5 years of trend following plus cross-sectional carry to smooth returns with multiple exchange redundancy. So you can split your money between 5 different exchanges. So if one goes down, you're not completely fucked. And it gives you the ability to run multiple vol targets. So you could run an aggressive account and a quiet account. It gives you a lot more flexibility, and you get a personal onboarding concierge and a coach who can talk you through any problems you have. Now, after the 2.5 years are up, the costs go to 2% of account balance and 20% of profits every year if you want to continue, which is what every hedge fund in the world charges. But for you right here, right now, here's the offer I have. Part 1 of the incredible deal is you can have 3 years, not 2.5, of fully automated trading for $5,000. You can beat the 6,500 price rise. You get cross-sectional carry for free. Others can only get it by paying the 9,500 premium package from January. If you're worried about getting ripped off by an exchange, you can split your risk between up to 3 exchanges, or you can hide your gains in a DEX. Now, the point about distributed exchanges is there's no username, password, and login. There's no name associated with your account. So I'm not telling you to not tell the tax office about your gains, but if you were to do that, well, ain't no one going to know. If you're paranoid of exchanges going broke, we'll let you trade a higher volatility target than is sensible and keep only half your money on exchange. So, for example, if you were planning on trading 100 grand, I would put 50 off to the side and leave 50 on exchange and trade it at a higher leverage and not take counterparty risk. That's what most people do. So part 4 of the incredible deal is once those 3 years are up, you can keep trading forever while you compound into generational wealth. And our charge is 2% of account balance per year, 20% of the profits we make together. You can have that. We're going to be the world's first fully distributed hedge fund on the blockchain, and it's cost us millions and millions in R&D. We're ready to bet the company that you make money. If you don't get rich, I'm going to go broke. So let's look at the deal again. You get 3 years of automated algorithmic trading with FinRev. You get a VIP onboarding with one of our expert crypto trader coaches. If you need help, the help is there from actual traders, not customer support people in the third world. You get a really comprehensive stats and monitoring package. You get cross-sectional carry system to smooth returns, which is a big deal. You get a customized volatility target to suit your own needs, depending on how aggressive you are. Personally, I run at 45. You can delay starting or pause at any time. If you think there's a great opportunity in the market, you just want to pause it. I'm going to YOLO some coins for a while and then put it back in. You can swap in and out. You can do that. You get multiple exchanges. And the big benefit is if you had all your money in FTX and FTX goes broke, you're fucked. If you split it up, you're not that. It's a gut punch. It's not a headshot. And one of the good things is if an exchange goes down and you've got it split in multiple exchanges, we are highly likely to make money in the other exchanges because trend following does really well in crisis times, and that would be a crisis. Now, we've got our double your money guarantee, which is that if you aren't in profit after your first 12 months using the system, we'll let you use it for free until you've doubled your money. And this is the very last week. You've got until Tuesday midnight to do this. finrev.trade/call is how you get access. If you need a payment plan, if you want a shorter commitment, if you want a longer commitment, we've got plenty of options. Just book in, discuss your situation with the enrollment stuff. If you've got to move some money around to get started, if you want to do something and then do that, plenty of options. We're very flexible. The enrollment stuff are good. They'll take care of you. So go to finrev.trade/call. And this isn't some sort of like high pressure teleshark sales chat. It's just enrollment guys just like me, actual traders who can help you. Well, that's not the deadline. Sorry about that. So let's just go through what we have again, and I'll take some questions. If anyone's got questions. Chris Melkus, if you want to do a 20-day breakout strategy, we have a manual one, which you're like a simplified version of FinRev that you have to exit yourself. You're perfectly welcome to have that if you're going to do that. John Guerrero, yeah, we give everyone help, and you guys, Hans Jurg, you definitely get the $5,000 deal. Yep, there's definitely a recording. I'll send that out to you in a few hours. What have I got to say about this? This is, yes, you can use your IRA retirement account. That is a really, really good question. I do mine. I use the Australian equivalent called a self-managed super fund account. You have to be careful. Freedom, you actually don't wish the FinRev Lite had more coins with it, because what we understand very clearly is that trend following works unequivocally better with the bigger coins and the quieter coins. So you think you want more coins, but trend following doesn't work nearly as well with small coins. Okay, Richard, are you going to explain the position size? Yes. Okay, so if we look at what is the volatility of, it's probably easier if I do some maths demonstration. Let's look at what the volatility of Euro USD is. So Euro USD is wiggling at, it's currently a buck 09 and it's wiggling at 0.00840. So it's wiggling around at 0.7% per day on average. And if we want to convert that to a yearly volatility, an annualized volatility, we need to multiply it by the square root of the number of trading days in the year, which for traditional finance is multiplied by the square root of 252, which is approximately 16, is a dodgy hack that quants use. So we're looking at 12% annualized volatility. If we compare 12% annualized volatility to, say, Solana, Solana right now we have 11 bucks 90 and it's roughly $100. So it's doing about 11% on a day annualized volatility. We need to multiply it by the square root of the number of trading days in a year, which is 365 because crypto trades every day, and that's 19.2. So we have 228% annualized volatility target. Now, because we only want an annualized volatility target of about 20%, the asset really goes at 228% per year, and some of them much higher than that. So we're only, in technical terms, using about 20% of our account balance. Randall, how can we get a comprehensive readout of each daily trade? Two ways. The first way is it's all in the first way. Let me find it. Is it's within FINREV. Let me just find it. So you can click on any coin and it gives you a comprehensive trade history, and you can spit it out. You can also get that in your brokerage, in your Binance, in your KuCoin, in your BitGet. And what I recommend is you get one of the automatic, there's a bunch of software as a service companies that you spit out a CSV and they do your taxes for you. So that's what I recommend. That's what I do myself. I'm not an accountant. Is there any manual intervention behind the scenes? Great question. No, never do any manual intervention. And the perfect example of this, last week, my balls were itching about this market. It had just gone too long, too far. I told everyone to sell everything. I sold $308,000 worth of profits. FINREV stayed 100% fully invested. I didn't override the system. I never override the system. We've never once overridden the system. And whether or not I beat the system or the system beats me, that's not the point. Okay. Do you suggest that your 100x people pull your purchase money from that FINREV account? FINREV, 100x Coin Club, in the right time, when the market is moving, especially the early stages of bottoms, nothing is going to come close to 100x Coin Club. Because it's not responsible investing. It's really a bit degenerate gambling, right? But in the fullness of time, I don't think I can beat FINREV in the long term. I can beat FINREV this year. Yanni, we do it all through calls, but if your English is not good, just let them know. We'll try and get. What language do you speak? There's every chance we have access to a speaker there. Steve, what happens after 3 years? We charge you 2 and 20, which is we charge you 2% of your account balance and 20% of profits we make together. Do existing FINREV users need to make any adjustments? No, none at all. Annette, don't understand the question. Okay. Yeah, guys, I don't want to take up any of your time, but honestly, like my honest opinion is that FINREV, absolutely you should buy it. Like everyone, my opinion, it's the best way to trade crypto that's ever been. It's the only way to trade crypto that you're definitely not getting fucked when the bull market ends. And the big thing is that, like cards on the table, these crypto is so seasonal. Like we've made so much fucking money this year, but really that's not because I'm good. It's because the market's in the right place. Like the market hasn't been in that place for 2 years. Now all of a sudden it's like, wow, it's so easy. That won't last forever. Um, Richard, FINREV doesn't need to use leverage. FINREV technically would, but I can't possibly imagine this. In fact, in the last year and a half, the maximum amount of any account that it's used has been 21% of account balance. So in theory, you could put 21% of your account balance in plus a reasonable margin for drawdowns, split it across exchanges, and that would be enough. Helen, when is a good time to sell our losing coins that didn't outperform BTC? Right now, I think. Honestly, anything that's not outperforming Bitcoin. David, yeah, just click that link. They'll hook you up with someone. Tony, we just deposit money there. You just put money. You hook. You get an API key from your brokerage. You plug that API key into FINREV. You put money into a sub account, and the next day it just starts trading for you. Annette, what if I'm a total novice? Works totally fine for novices. My father's 76 years old. He's like the boomerist boomer you could possibly imagine. Your Freedom FINREV Lite is going to be a lot of work, to be honest. Like, it's a new job. Like you're going to have to be in there like every couple of days. You're going to be buying something and selling something, and you want to learn how to do that correct. Okay. Any other questions? I think we covered it all. So thank you so much. Yeah, go to finrev.trade/call. Let me just type that in the chat. Thank you so much for your time, guys. You definitely want this. This is what I recommend. This is what first product I've ever had that I put my parents in. You know, it's like it's that product. I let me show you something. So I was having a conversation with a buddy of mine yesterday. Where is it? This is what I told a friend of mine. Like, no shit, you should buy it. No shit, for real. One of the best ideas you could have is buying my back end offer. The front end offer is just degenerate gambling, but hugely fun. The back end offer is an astonishingly well engineered automated trend following algorithm. We've reverse engineered off a big hedge fund. Works amazingly well, like printing money. And you know, this is what I tell my friends. Right? So yeah, thank you so much for your time, and it'll be recorded. I'll get the recording out to you shortly. See you guys. Happy New Year. Book those calls. They fill up real quick.